I want to talk about the downfall of the IT sector in the stock market in past 1 month. This sector is down by more than 10%. A few of the biggest companies in this sector are down by more than 15%. It is a big sector, and a lot of investors have a sizable portion of their portfolio allocated to this sector. And for that reason, this kind of event creates a kind of panic in the market. And on this panic, there are two kinds of extreme ideas which float around in the market. The first one is that the future of IT sector is over and you should exit as soon as you can. The second one is that now is the right time to get entry into these fundamentally strong stocks. You and I, as sensible investors in this situation, need to assess this situation rationally and then calculate what should we do about this situation. So if we look at the market data, we see a clear pattern of sell in high volumes, and this indicates that institutional investors are selling and they are exiting. And overall news in this sector is that AI is taking on the jobs for which these IT companies has been traditionally charging. And this is kind of creating a threat to the business model of these IT companies. But if we look at the financials of these companies for past quarters, then we see that they don't see much of an impact. There are negligible downfalls, but we don't see any major, downward trends. Now, this brings us to a very big question that if the fundamentals of the companies are intact, the financials are same, then why the prices in the market is falling? This tells us a very important lesson about how the stock market operates. The thing is that these institutional investors and market as a whole does not rewards you for your current financials or your past performance. It rewards you based on your future prospect. Now, that is one part of the situation. Second part is that, and this is going to sound almost contradicting to what we just talked about. So listen to the next part carefully. A lot of times, situations like this, where the trend is saying something else and the finances are saying something else, are actually opportunities for you to seize or for you to buy these fundamentally strong stocks at a discounted price. The reason why I am saying is that, if you look at the financials of these companies, they are very strong. They have a massive free cash flow. If you don't know what free cash flow is, then let me tell you, free cash flow is the cash which is left with the company and they can do anything with this cash. And a lot of times what happens is that these companies, when they sense threats, they use their cash and acquire their competitors or acquire the startups or the companies which are operating in the AI sector or the sector where from wherever they are feeling threat, because these companies has almost negligible debt and they are very asset light businesses and they operate at very high margin. So they are left with this free cash and they are not going to sit with it. The market and the trends in the market is creating a threat for them, but they're also going to act on it and they have the resources to execute their ideas. So, now it comes down to you that do you understand this industry before putting up your money into this? Do you believe that the management of this company is going to use their free cash flow wisely? And are they going to reinvent their business model to, tackle the threat which is coming from the market? If you understand all of this, if you understand the industry, then you have an edge. Most of the times market operate on sentiments, and if a downfall starts, then a lot of investors follow the same trend, and this trend goes in loop and it creates a kind of overall trend, the one which we are seeing. So this kind of trends happen in the market, and they may or may not be purely because of the data. As we saw that the fundamentals of the companies are almost intact. It is the future threat because of which market is, selling them or punishing them.